Welcome to our weekly Forex forecast. My name is Jay Norris. I'm a trading instructor at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. First market we'll cover today will be the Australian US dollar. Here's the Aussie USD. You could see it poked its head up again. You got right to resistance. That's a RTT level, basically drawn from, you take the December high to the low, and you've got resistance there in the market. Knocked its head on it. Friday it also hit that Bollinger Band to the middle of the Bollinger Band. So, overall, nothing's changed in the Aussie. I think the formula here as a trader is to sell rallies. Basically, you talk to most any professional who's designed trading systems or who's come up with trading plans, and the one thing you always find in common overall is 90% of them, your core strategy is selling rallies and downtrends or buying dips and uptrends. Can't overstate the simplicity of that, how important that is. And you're looking at a downtrend, and you can see how successful selling little upticks in that downtrend has been. So I think this is just another bull trap. You know what I love about this market too? The public is still buying it. If you look at your retail trade ratios, the public still likes buying this market. They're still long it. So there you go. We like selling rallies in the Aussie, so we see no reason why that strategy shouldn't continue. Aussie essentially a proxy for the Chinese economy. If China can pull off a soft landing overall, it's going to be years before we know that for sure. So we think that the trend in place right now, i.e. this downtrend, this intermediate downtrend, this long-term downtrend, that's still in play, and that's what's happening now. And as a trader, you definitely have to go along with what's happening now. Next market we're going to take a look at is the dollar chief, the Swissy. I've said it before, we're in the bull corner here. We think very much you're seeing distribution here. You're seeing a long-term bottom being sewn out. The reason why you don't want to get caught up in trying to pick tops and bottoms because they're very dangerous. The distribution phase in the market, very dangerous because you're seeing these big wide swings back and forth, overshooting support, then overshooting resistance, in the end not going anywhere. Kind of like the Swissy right now. You go back to October and it hasn't gone anywhere, but you've seen a lot of volatility, a lot of up and down in there, and that's the hallmark of a market carving out a bottom, the old proverbial ocean tanker turning around. It takes a long time for that to slow down and actually turn around, and we still think that's what you're seeing right now. As long as I think this green line here holds, what is that, 89.17? Well, let's just say 89. As long as 89 holds, I think you still buy dips in here. 88's the low. Well, I guess one way of saying it is if I like this market at 90, I'll love it at 89 and 88. We don't think anything's going to change here overall. That it's just in the process of carving out a bottom. Next market we'll take a look at will be the dollar index. You're in a similar mode here. You can see it's holding support. And what did we say before about the importance of buying dips? That most every professional, that's the premise. That's the bulk work behind their method. Buy dips and uptrends, sell rallies and downtrends. And you can see overall since November, really since the new year too, basically, that the market's in an uptrend. And you can see that buying those dips, a lot of people involved in that too. Look at how quick they are. Look at the wicks on there. So the market doesn't stay down long. So you're sitting on support. Friday's low was a support level. Not that big of a deal. It's a shorter term level. I would look potentially for this level here, but we still like buying dips in this market, and that's the strategy. What I like, look at that Bollinger Band. We have that custom Bollinger Band we made. It's pretty cool, right? Look at how it's just bordering that. When you see a Bollinger Band coming into the narrows, you're getting close to a breakout in the market. So we'll watch that. And these are daily charts, so when we say a breakout, that doesn't mean it's going to happen right away. We're going to monitor that, but put it this way: the tighter these narrows get, the more in this sideways overall range that you stay in, the more likelihood of that breakout becomes. We think the breakout will be in the upside. And here's one again where, hey, if I like this market at 80, I love it at 79. I'm ecstatic at getting it cheaper than that. Let me go to a weekly chart and I'll show you overall. Here's your primary pattern. Your primary trend in this market is bullish, right? That's an uptrend that you're in now. We have higher lows, and we have higher highs. So you're in a big uptrend. What's our strategy? Buy dips in an uptrend. So again, if I like it in the 80s, I love it. In the 79s, give it to me in the 78s, right? So here's a market where you have a lot of support down below. We like the dollar index long term. And you have to have a long-term view. Definitely with all the shorter term ups and downs, you have to have something that you can hold on to. And we think it's that primary pattern being up in the dollar. Likewise, long-term primary pattern being down in the euro. Here's the euro, and you can see overall that, here's the high and here's a lower high. So, we think that this overall pattern in place is still bearish. There, if you scoot out a little more, you can see it a little better. That big pattern of the lower highs, that grand pattern. So we're still on the short side here. Let me drop it down to a daily. You knocked your head on, you couldn't quite get to resistance there, that orange line, nice RTT level there. Then you have that 50% line up there. So just keep selling rallies in this market. So the overall pattern, you can see it's starting to unfold here, and then that's how markets top out. That's distribution. You have those big wide swings as it tops out. Market makes a lower low. Everyone gets excited. They get short in the hole. Then what happens? They get run out. They get stopped out on the run up. Well, that's just the market doing its job. It's market makers doing their job also, as far as being able to sell the rallies. Again, selling rallies in a downtrend, and that's how we see this market right now, in a downtrend. So you want to continue to sell rallies. You have one right now. Last market, the yen. I've kind of been overlooking the yen in our reports, and I apologize. I like the yen. I like buying dips in the yen. Here you have a nice, you had a bottom. That purple line's a 50% retracement of this overall rally. So you had a perfect 50% retracement there. Like seeing that. That yellow line, that gold line on top of it there, it's you have a nice confluence there between the gold line. The gold line's at 382. You go all the way back to the summer of 13, and you come all the way to that high, and you did a 382 retracement. So, here's how you do it. If you have a big uptrend, you want to buy dips in that uptrend. Look for dips onto a confluence of support, and that's exactly what we had this week in the yen. We would love to see it come down here and give us a nice double bottom. We'll be interested in that double bottom on that purple line. And, maybe bonus, maybe they overrun it, maybe they run out stops, and we get an opportunity closer to par. We love the yen at par. Again, we like it, if you like it in 102, you got to love it in the par handle. So that'd be something to keep an eye on right there. So nothing's changed for us overall. We think the dollar's in the process of carving out a wide bottom in place right now, i.e. the euro would be carving out a top. Thank you so much. We look forward to seeing you next week. My name is Jay Norris, and I teach trading at Trading University.